Hey guys, good afternoon. It's Vinod from GrowWealth. Today is the Sunday, the 29th of May, 2022. Hope you're all well. In UK, we are having a short week the following week due to the Platinum Jubilee celebration. So hope you have good holidays to look forward to. The market has been quite good in the last couple of days. There was the much awaited bounce that we have been waiting for nearly 7 or 8 weeks. You might remember from our last week post that S&P 500 had 7 consecutive down weeks. And the last time this happened was back in March, January to March 2000. Whereas Dow Jones Index had 8 consecutive down weeks. And the last time we had such a consecutive down weeks in Dow Jones Index was, do you want to guess? 1923. So it's nearly a century ago that we had this persistent week after week down weeks for 8 weeks in a row for Dow Jones Index. So a bounce is destined to happen, and we did get that. So that broke that kind of historic downtrend run week after week. So all the index finished positive. Is this the bottom? A lot of people think so. Some people are questioning. I don't think we have enough information to just yet say this is the bottom. Such bounces, spectacular bounces, are quite common in bear market. These kind of relief rallies, dead cat bounce, are not unusual in a bear market. Having said that, there are certain other secondary indicators that I follow suggest that there may be some interim bottom in place, but who knows? We will have to see. We need a bit more of a data from the market over the next few days, maybe a week or two, to solidify an impression whether it is the interim bottom or not. We'll have a further look in greater detail, the stock charts, and see how it goes. All right, so I hope you can see this. I'm going to use the stockcharts.com as stockcharts.com chart for CPC, the put call ratio, because there's some problem with the trading view chart just for this particular ticker. So as you can see, the CPC index has finished back within these 2 lines into the neutral zone. Above 1.1, everyone is thinking in a bearish way. Below 0.8, everyone is bullish about the market. It is a contrarian indicator, so the market is likely to do the opposite to what everyone is thinking. It is now in the neutral zone after being in the bearish territory, which is good for market because following that, it had a bounce. So with the bounce, people are leaning a bit more bullish, so it came into the neutral zone. So it's not giving much more pointers to us, rather than to say it is neutral. People are not too bullish, not too bearish. Going to this chart, hope you can see this. Let me reshare it just in case if there is any issues with sharing. So moving on to the S&P 500 chart. These are weekly charts, as you can see. So as you can see, these are the 7 consecutive week down weeks. And then we had a very good run, 6.5% up move in S&P 500 in just 1 week, on good volume as well in the last few days. We did have follow-through days on Nasdaq as well. We'll come to that in a second. But look where it has come to. So it used this February 2021 high as a support here, and then bounced. It only bounced just to the 8-week moving average. That's this white line here. And it hasn't even come to the May 2021 support zone, which it breached here yet. So it could very well breach that and reclaim it next week if further up moves happens, but it hasn't done that yet. And that is the point to note. And the 21-week, 50-week EMA are confluenced here just above that's previous support, now turned resistant zone. So this particular area here is likely to act as a resistance. The market, if it breaks above that in a convincing way with high volume, that would be positive. Until that happens, you have to be a bit skeptical cautious to see how it progresses. It won't be surprise me if it goes up a little bit, finds some resistance here, and then rolls over back to the continuation of the downtrend. But for now, I'm staying cautious and taking as it comes. The one good week is welcome compared to the 7 down weeks, but it is still not bullish yet. We need more confirmation. This is the triple Q, that's the NASDAQ ETF. Similar bounce, 7% gain, but slightly bit even weaker than the S&P 500 because it hasn't even reached the 8-week EMA, unlike S&P 500. It's well below the February 2021 high levels. It's just about reclaimed the August 2020 high. So it's got quite a lot of resistance zones here. So it's going to be a tricky, cautious zone here. If it breaks above all of those things and reclaims the 50-week moving average, that will be positive, but a lot of work to do for that. New York Composite Index, sorry, NYSE Composite Index, similar stuff, regained. Actually, it kind of closed about the 8-week moving average, but look at where it closed. It's closed pretty much to the dot on the previous support level. Now it's likely to act as a resistance. Next week would be the key. The 2150 EMA confluence is here as well, similar to the S&P 500. So this zone here is a zone of significance. So we want to see how the stock market respond to that next week. For now, these are the points to note. It's below the 50-week and 21-week moving average, and that means it's still in the downtrend until that is reclaimed. Next one is Dow Jones Index. Similar story, pretty much ditto to the NYSE Composite Index. Reached this March 2021 support level and now acting as a resistance, 50 and 21-week moving average. About that level, likely to act as a resistance in the downtrend still. This is the Russell 2000. It used the January 2020 level as support. It came all the way to this gap here. It hasn't filled the gap yet, but came to this level, retracing almost all of the coronavirus, post-coronavirus run in the market, and then it bounced off. Where did it bounce off? It bounced off just to this level here, the low of here in January 2022. So it's got quite a lot of resistance zones here. It could maybe bounce a little bit off, but then it's still in stage 4 downtrend. There's a lot more work to do to reclaim that 50-week moving average, and for us to consider the trend has changed. So for now, maybe shorter term place, but long term still in the downtrend. UK index, however, is slightly bit different. You might notice that it never went into the stage 4 downtrend ever since it came out of this coronavirus recovery post-vaccination news in November 2020. It has been using the 50-week EMA as support, except in this area where it moved below, but reclaimed it the very next week. It retested that level, 50 EMA, the last couple of weeks ago, but then it's reclaimed the 21 and 8 EMA. It is not at the all-time high yet, but it is much more positive than many of the US indices. Right? All-time high is here back in May or March, or is it May 2018? But it's very close to the post-coronavirus, immediately pre-coronavirus top. We tried once, tried twice. Who knows? It might kind of through a third time lucky, maybe it might break above that. For now, it's quite positive compared to the other US indices. Moving on to the Bitcoin. We had the support zone between 30 and 33,000 mark, which has been breached. It's kind of trying to see if it can establish a bottom around $28,000, $29,000 level. It is, to be honest, it's not looking that good. It is in downtrend. If I kind of hide this, it is not looking good. That was an inside week. It's trying to break below that. So cryptocurrency is not looking good. Quite weak. There is this huge kind of zone here without much of a volume, kind price volume here. So if it drops here, it could go very well into mid-teens, 20,000 or 15,000 level mark right there. What is it? It's the previous high from 2018, 19,000, 20,000 level. If this 28,000 mark breaches, so quite bearish still on it. Right. So now let's move on to looking at how our watch list stocks has been doing. Oil and gas sector, exploration industry still is in favor. I did a huge amount of scan earlier today, over 500 stocks in it. Majority of it, 85–90% of that are all in oil and gas sector. There are some other industry gradually coming up, but oil and gas is still the dominant sector. The others include utilities, dividend-paying stocks, some biotechs is also there, and very few technology stocks is still coming up, unlike before. So that's the early green shoots are coming up. So Shell is continuing its uptrend. That's this previous support now turned resistance, but not much of a resistance there other than a couple of weeks of pullback, and then reclaim that. The range of the trading in a week has been narrowing. The volume is okay, but the range is narrowing. So I wouldn't be surprised if it kind of takes some pause, goes sideways to consolidate, or pulls back towards the 8-week moving average for a bit of consolidation. There has been talk by the UK government to levy windfall tax on oil and gas industries that has profited from this increase in the oil prices. So that may impact on Shell's stock price temporarily, but the oil price has not come down yet. So that will probably provide some support with further increase in oil price. But it is a little bit extended compared to where it broke out into the stage 2, right around this level, 1531.30 level. So it has a nice 800-point move since it broke into the stage 2 uptrend and continuing to stay bullish on the stock. SLL, another oil and gas industry stock. So it is in stage 2. It gave another entry point here following a sideways consolidation and breakout on higher than average volume. And it had a good 20% move in 2 to 3 weeks time. It took a pause, but it's still healthy looking chart and bullish setup. VTNR, it's a nice cup and handle breakout here, and huge run, nearly 30–40% move in the last 2 to 3 weeks time. It had an inside week last week, so next week will show us the direction whether it's breaking out or breaking down from that inside week. But a solid stock chart. SOI, another oil sector stock, said broke out of this at 12.09 and quickly moved to 20%, nearly 20% mark in a couple of weeks time on accumulating higher volume. So big money is coming into this name. Let's look at the daily. Yeah, nicely hugging the T line and then pushing up now on high volume. Really bullish looking chart. There is some resistance here. This previous high here from March 2021 can act as a resistance. So that is to be monitored if you're trading this name. What's this one? So this is LTHM. Nice breakout, retest, a second retest, and then on strong volume, it's pushing up and closed at all-time high level. And on the daily, it had a good strong bounce along with the market. So these are the reasons why you need to keep watching the stocks that are performing really well and not giving back much of their stock price in a weak market, thereby showing relative strength. When the market bounces, the stocks that are showing relative strength are likely to be the ones that is moving out of the gate, running out of the gate quicker and jumping to the higher side. And first in line. So that's what has happened. So market has been going down week after week, whereas LTHM has been pretty much going sideways here, right? So all these 7–8 weeks, it is building its relative strength. And when the market eased, it had 21% jump. So this is the benefit of kind of monitoring, screening for stocks showing relative strength and being on it and looking for entry points. For example, this is a 5-6 day, couple of weeks consolidation here. So that would have been a good entry point on higher than average volume and would have given you 15-16% more in a couple of days' time. Good moves, right? So this is how you screen for stocks, look for relative strength, and look for good entry points, and risk reward ratio is quite important too. So look for good stop loss entry points. So LTHM, all-time high, high volume coming in, breaking out, good bullish setup. ALB, Albemarle Corporation. So it's kind of building a base here, but early entry point here, maybe a handle, low handle on high volume breakout, 15% breakout last week. So good, positive looking bullish setup. NTR. So I expected that it will recover to the upside. It hasn't. It's still consolidating. Currently using the 21-week moving average as support. It hasn't given me. So although the average volume, the volumes are a little bit above average, it is declining during this consolidation phase. So I wouldn't say it's a negative looking chart. There are better looking charts in the market, yes, but it hasn't broken down yet. It is a gentle, streamlined consolidation pullback to the 21-week moving average. If the 21-week moving average is breached to the downside, that will be cause for concern. So I will be watching for that level here. If it kind of moves up, then that is much more encouraging positive sign for further up moves to come. AMR, really strong chart, one of the strongest you could find in the market ever since the start of 2021. It's been an attack. It's moving from $20 to the current level of $180. One could argue it's extended, but it is really bullish still. It kind of pulled back, used T-line as support, new high, pulled back, used T-line as support, and new high close. The pullback volume are a little bit higher, as you can see here. The red week volumes are higher, so there are some distribution happening. So that is to be monitored. But if you go to the daily, the high volume days or the positive days, so that is encouraging, albeit it's kind of lowering in volume when it tries to break out. So there are some amber signs, but really positive looking chart. Wheat is still in uptrend. It kind of gapped up quite a bit here, about 15% or something like that, and then profit taking happened. It came back and found support at the T-line, the 8-week moving average. So the last couple of weeks has been a distribution week on the weak commodity. If you look at the daily, though, it is about the 50-day EMA, and the last couple of days, along with the market, the wheat price has also recovered a little bit. So as long as it stays above the 50-day moving average and 8-week moving average, I would stay bullish on this name. Yeah, so what I expect in this one is maybe further upside next week, but let us see. I have a position in another ETF, but on the wheat commodity, and I'm having a very tight stop loss because it has retested this level. I don't want it to go below that. Next one is, so I think I added this last week as a focus list, NTCT. It broke out of this consolidation zone on high volume, and last week it had a follow-through week in terms of to the upside, 5.76% upside, nicely following through. The volume is slightly lowering ever since the breakout has happened, but it is still positive. I expect further upside or consolidation to the sideways. I have added a couple of stocks, additional stocks for this week to the watch list this week. And one of them is the UK stock, EMG, that's Man Group. So it is on the nice uptrend, pulled back earlier this year, closed below the 50-week moving average, for a month or so. And then early March, it regained the T-line and the 50-week moving average. And ever since, it has continued its uptrend. And as you can see, the previous all-time high has acted as a resistance for about a couple of months. And last week, it broke out of that resistance on high volume. And also it had a MACD positive. MACD is also on the positive territory, indicating the momentum is back in this name. So this is a good setup. So we got Shell, one of the UK stock, and we now have EMG, Man Group Limited, another UK stock. And the next one is SAFM, Sanderson Farms. Similar story, uptrend, consolidation down to the 50-week moving average, nice scoop pattern to the previous kind of consolidation zone. It went sideways for about 6 weeks, 7 weeks, or 8 weeks or so, and then breakout on high volume and positive MACD. And if you look to the sideways of the chart, this is its all-time high price on positive earnings and also volume and MACD. So this looks really strong and bullish. In my scans, I said majority of them is oil and gas sector. I'm also starting to see some farm produce, chemicals and mining stocks as well. Some biotech, maybe for another day. I'm not going to cover any biotechs in this week's watch list yet. We've got quite a few names, so we'll stick with that. So what I'm trying to say is there is a bit of bounce happening. It could be relief rally in a bear market or a dead cat bounce, or it could also be intermediate bottom. But for us to be much more confident in that it is an intermediate bottom, we need more data. However, we have some indication. We'll go back to the triple Q on the daily. We have some indication that positive indication to have a little bit of additional confidence in buying. And that is the follow-through day that we had on Friday in NASDAQ. So high volume than previous day, and the price has moved over 3%. What has happened to the SPX? So on SPX, we had that on Thursday, the 26th of March, nearly 2%, just tad below 2%, but on high volume than the previous day. So what Bill O'Neill of investors.com, IBD, used to say is if there's a follow-through day, you should start to at least buy something and then watch the market closely. Not all follow-through day turns out into a bull market, but there isn't a bull market without a follow-through day. We did have a follow-through day a few weeks ago, which failed when it was undercut a few days later. So that can happen as well. That could be multiple failures of follow-through days in a bear market. But when it's time to reverse and the bull market is about to start, follow-through days are a good indicator for us to draw us in to the market. So we did have a follow-through day in NASDAQ, and I would say in S&P 500 as well last week. So that gives us a reason to get into the market a little bit more, right? So hopefully this watch list gives you some interesting ideas for the setups and also the names for you to consider whether it suits your trading strategy and trading philosophy for you to enter or exit or watching the sidelines. Hope it was useful. As usual, you know the disclaimer that I'm not a financial advisor. These are for educational purposes only. It is not a buy or sell advice. Use your own due diligence, have risk management strategy, and trade wisely and safe. Okay, happy learning, successful investing. Hope to see you in our next video, next week's analysis and watch list update. Bye-bye.